Moving on to our next video, expected returns from equity in the long term. By now, we are familiar with the basics, that is, what is equity, what are share prices, and how are these prices derived. Next, we look at equity from the returns or growth perspective, which is the fundamental reason behind investors investing. The most important reason behind equity's success as an investment asset class is it has given the highest real returns among all asset classes over the long term, not just in India but also globally. Now let's look at some facts to understand the potential that equity has. This graph shows the US real return data, that is, the returns after providing for inflation, for various asset classes for a period of 200 years, that is, from January 1802 until December 2016. As can be seen from the graph, the currency, that is the dollar, has lost an average of 1.4% on real return basis. A dollar worth of gold has increased to a little less than just $3 over this period of 200 years, resulting in an average real return of just 0.5%. Now coming to debt, bonds and bills, although have performed better than gold over the years, yet the average real return from bonds and bills stands at less than 4%. And among all asset classes, equity represented by stocks has emerged as the winner. A dollar worth of equity back in 1802 is worth more than $11 lakh in 2016, while the second best, that is bonds, stands at just $1649. And this stupendous performance delivered by equity is despite the volatility that it has faced over this period of 200 years, as can be seen in this graph. This is about United States. And in India, although we do not have a 200-year long data, but we too have a 4-decade story to share. And India has shown a similar trend too. Here 1979 marks the beginning of the Sensex. And it started with the value of 100. 39 years later, towards the end of April 2018, the Sensex is trading at 35,000. This means if an investor had invested rupees 1 lakh in the Sensex in the year 1979, his investment would have been worth rupees 3.5 crore in 2018, meaning the investment would have grown over by 350 times. Now we have a performance comparison of various asset classes in India for the 37-year period from March 1981 until March 2018. Like in the US, in India too, equity, represented by Sensex, has outperformed all other asset classes over the long run. All other asset classes, including gold, silver, bank deposits, company deposits, have all outperformed inflation by small margins, as you can see here. It is Sensex which has generated a total return of 15% over this 37-year period, thereby delivering an 8.4% return over and above inflation. Now let's see how an investment of rupees 1,000 made in March 1981 in these different asset classes fare over the long term. So if an investor had invested in any of the traditional instruments like gold, silver, bank deposits or company deposits, his investment of rupees 1,000 would now be valued in the range of 14,000 to 28,000. But if the investor had invested rupees 1,000 in the Sensex in March 1981, that 1,000 would have now grown to rupees 1.5 lakhs over this period of 37 years. So that was all about expected returns from equity in the long term. Thank you.